Hey, my name is John Marino. I'm the owner of All American Insurance Alliance. As Professor Q mentioned, I'm an independent insurance agent. My office is on 340 West Butterfield Road on the fourth floor. The difference between an independent agent and what's commonly called a captive agent is that I can sell for any company that will give me a contract to sell for them. As Professor Q mentioned, Erie is by far the best carrier that I represent. They're always in the top of the Forbes list. They're always at the top of the JD Power satisfaction surveys. It's a very highly regarded company in the insurance industry, only available in 12 states, Illinois being one of them. And, their reputation is for paying claims, very high satisfaction rates for that. The rates are really good because they take all the marketing money that other companies spend on all the commercials and Super Bowl ads, and they just use it to try to keep the rates as low as they possibly can. So you'll never see a commercial for Erie Insurance anywhere on the Super Bowl or any other commercial on TV or the radio or whatever. So you will see agents like me promoting Erie through our agency. So if you guys are active on social media, you can look me up. I'm on TikTok, I'm on Instagram, Facebook, Nextdoor, I'm on the Elmhurst News and Comments. Basically any social media channel, I'm on it trying to promote my agency. So that being said, I'm here to talk about insurance. I'm going to do my best not to bore you and put you to sleep. If I do put you to sleep, please try not to snore. And I'm going to do my best to not sound like Charlie Brown's teacher either, okay? Like, all right, I'm going to try to do my best to keep you guys engaged and interested, okay? So nobody that I know of in the insurance world, and I've been in the insurance world for 17 years, ever, laid in the backyard in the grass and looked at the sun and thought about, I really want to be an insurance agent someday. That's all. You want to be an athlete. You want to be maybe a fireman, a policeman, a doctor. Nobody ever says that about being a teacher. Nobody ever says that about being an insurance agent. Okay. So I get that. Nobody that I know of in the industry, tried to be, just everyone kind of fell into it. It seems like it's like, oh, kind of by accident. I was talking to someone and I thought it sounded cool. And so then I decided to do it. It sounded like it might be a place where, I could make some money and whatever. And that's honestly why I'm standing here. So, I sold food for like 20 years and I was having dinner with a friend of mine and the food world was getting, way more competitive than it was when I started. And so I asked him if there was money in the insurance industry, and he said, "Yeah, absolutely. Become an agent." So, from the ground up, I started working at a State Farm agency. Learned everything I could. I worked for AAA for a little bit. I worked for a local farmer's agent for 9 years before I opened up my agency. So I've been in the space about 17 years. I've been in my own agency. It'll be its 3-year anniversary, January of 2022. Yes, sir.
Favorite things about insurance for you in the insurance industry? Worst things about it?
My two favorite things. First thing is absolutely helping people. So when someone calls me, my goal always is to try to find better coverage and save you money at the same time. So that's always my goal. If I can't save you money, most of the time I can still put you in better coverage than you had, and you may pay about the same rate or so. But the company that I'm going to place you with, if you qualify for Erie especially, there's nobody that, Erie's really second to none as far as, all that goes. The second thing about it is knowing that when someone comes to me for help and they have questions, that I'm there for them. That's my goal always, is to try to be as accessible as possible. So whether you email me, my office number is textable. My customers text me a lot. They shoot me emails or they can call me. There's so many different ways where I try to be able for my customers to reach me when they need me. Obviously, when someone has a claim is the best time to shine, when, their whole world's falling apart. If they had a fire or a really bad car accident or something, then I can make sure that, I do everything I can to make sure that they get put back to pre-loss condition if possible, whether that's replacing the car or fixing the house or replacing their personal property if it's a fire or a burglary or something like that. So, the peace of mind that I get to provide to my clients as far as making sure that they're taken care of, that's what I really enjoy about what I do. The two things I don't like about insurance is that a lot of people call and, let's be honest, nobody ever calls me and says they want to pay more for insurance. Okay, that just doesn't happen. Everybody wants to try to save money, but when they try to save money with like state minimum coverages, which when you're young and you have state minimum coverages, which state minimum coverage means bodily injury liability limits are $25,000 per person, $50,000 for the total accident, and property damage coverage at $20,000. And I'll break that out. I'll tell you what that means. $25,000 per person for medical payments. So if you have state minimum coverage and you hit me and people in my car are injured and people have to seek medical treatment, each person in my car is only covered for up to $25,000 in medical bills, up to $50,000 maximum for the whole accident. So if I have 3 people in my car and they each have $25,000 in medical bills because they get severely injured, that's $100,000, right? Me and the other 3 people, that's $100,000. Your state minimum policy is only going to cover 25 per person, 50,000 maximum. So who's going to pay that other 50,000? Going to come out of your pocket. They're going to seize assets. They're going to garnish wages. They're going to do whatever they can. If you own a house, they may make you sell the house. Whatever they can do, the insurance company that is involved, or an attorney, right? If you're an attorney, you're going to lawyer up. If I'm an attorney, I'm going to come after everything you got because I'm going to get a third of it, right? So if I can get you a good settlement. So that's why it's important to not have state minimum coverage, because there's just so much to lose, and state minimum coverage doesn't cost 4 times less than if you had 4 times the coverage. So if you had $100,000 per person and $300,000 maximum for the occurrence, you basically have 4 times the coverage, and it's not 4 times the premium. It's just kind of like a bargain that they give you. The higher your coverages are, it doesn't cost you in multiples of that. So always something important to look into when you guys are ever shopping insurance rates. So that's the first thing that I don't like about it. The second thing I don't like about it is I really cringe when people call and say they want full coverage. As an insurance professional, there's never any event where everything is fully covered. There's always something that's not going to be covered, and that's not the insurance company trying to weasel out of things. It's just what makes the most sense for policy. So when someone calls me and says they want full coverage, they generally mean they want bodily injury liability limits and they want collision and comprehensive coverage. So collision coverage is if you smash your car, you're going to pay the deductible that you select, whether it's $250, $500, $1,000. That's what you're going to pay first. The insurance company is going to pay the rest to fix your car, or if it's in excess of usually 75 or 80% of the value of your vehicle, they're going to call it a total loss, and they're going to give you a check for the value of the car minus your deductible. So if it's a $10,000 car and it's got $8,000 worth of damage and your deductible is $1,000, you're going to get a check for $9,000. They're going to subtract the deductible off of it, give you a check, and you go buy a new car. So when people call me and say they want full coverage, I kind of cringe, because I don't want to ever give the implication that everything is fully covered, because it's really not. There's always something that's not going to be covered. So if something like, when people call, I always say, well, what do you mean by full coverage? Do you want car rental? Do you want towing and road service? Do you just want collision and comprehensive on top of your bodily injury liability limits? There's so many different things that I could offer people when they say full coverage. It just makes sense to ask more questions. And obviously, as you guys are in this class, be a little bit educated about what you're looking for. And I enjoy educating the people that call me, because then, like I said, it gives me the opportunity to add a little bit of value when they call me. It's not just calling an 800 number, someone trying to sell you something right away so they can get you off the phone in 15 minutes and write a policy and put something in place that they're going to make a little money off of, and God knows if they put the right coverage in place for you. So that's a lot of that, unfortunately, that goes on in the industry. So those are the things I like and don't like about what I do every day. Every day in my office, the phone rings, people call, they want insurance coverage or they have a claim, whatever the case may be, and I try to help them. So there's a couple different things that we should probably touch on. Let's say you're going to buy your first home and the home costs $300,000. Okay, you're buying a starter home, it's $300,000, and you call up and you need insurance for it. So what we do as insurance companies is we try to figure out what it's going to cost us to rebuild your home from the ground up. Just because you're paying $300,000 for it doesn't mean it's going to cost $300,000 to replace it. It may cost much more. With the cost of time and materials right now, with inflationary indexes going through the roof, it may cost $400,000 to replace the house you're buying for $300,000. It's just the way it goes. So whatever the square footage is of the home, a lot of times there's a quick multiplier you could use, $250, $300 a square foot in some cases, multiplied by 1,500 square feet, and you're at like 450,000 or so in replacement costs, just as a top of the head calculation. So what we do is we do that, and then we figure out, do you have any, let's say you just got engaged, maybe you have a nice wedding ring or a piece of jewelry. Do we need to add that to the policy? Because you could certainly cover that. You could have a jewelry policy, or you could have a jewelry rider on your policy where your homeowner's policy will cover that piece of jewelry. You have to schedule it. You have to have an appraisal that's less than 3 years old most of the time. And so let's say it's a $10,000 ring. In most cases, it'll probably cost you about $10 or so on average per year per thousand to insure it. $10,000 ring costs you about $100 a year to insure it. So if you're on your honeymoon in Italy and you're going down the canals of Venice and the ring slips off your finger and goes to the bottom of the canal, never to be seen again, you could call your insurance agent and say, I can't believe that my ring slid off my finger. It's gone. So we put a claim in for it, and you get the replacement cost of that ring. So we try to replace it for the same quality of diamond, the same design of the ring. We try to make everything as similar as possible to the ring that you had before. So that's something that's important as far as I'm concerned when I insure people, because once again, a lot of people think everything's covered, and everything is not always covered. There's always something that's not. Another thing that's not always covered is called backup of sewer and drain coverage. If you have a basement and it's a nice basement, you always want to look at, do I have coverage for the basement? If the sump pump fails, if the city sewer backs up into your basement, could you imagine how nasty that would be when that happens? You got a beautiful basement with rugs and paneling or drywall on the walls, and you got couches and toys and whatever, video chairs and all this stuff in the basement, and the sump pump fails, and you come home from work one day and there's 6 inches of water in your basement and everything's all wet. If you don't have backup of sewer and drain coverage on your homeowner's policy, and you call your insurance agent and you say, hey, do I have coverage for this? And you say, and I would say, well, we talked about it and you decided either, yes, I thought it was a great idea and I have $10,000 worth of coverage for it, or you felt at the time that it probably wasn't necessary and I'll never flood. I have a sump pump and it's brand new, and the people before us never had a problem, so I don't think I need it. And so that's it. So some people roll the dice and don't take it. Some people are absolutely adamant that they need it. I try to point out what I feel is important, and my clients decide what they feel is important or not. And that's totally up to you. It's totally up to your call. But when you decline something, it definitely goes in the notes in your account saying, Joe Smith declined backup of sewer and drain coverage. I offered it, blah, blah, blah. And, a lot of times I'll save the email. Just as a for instance, I had a client, was brand new, moved to Elmhurst, kind of a corporate guy. At the time, he had his little BlackBerry with him. This was how long ago this was, right? He had a BlackBerry. So he's sitting at my desk and, trying to buy a policy, and I don't know what he's doing, trying to buy the world or whatever he was doing, but he's clicking on his BlackBerry, barely had time to look up and talk to me. And I was like, all right, here's what we got. He's like, all right, well, send me a proposal. Okay. So I sent him the proposal. It was a policy. It had backup of sewer and drain protection on it. He emailed me back and said, oh, that makes the policy cost too much. Leave that coverage off of it. I don't want it. Okay, great. I saved that email, specifically saved it in his file. Wouldn't you know, 6 months later, Elmhurst has a crazy rainstorm. The sump pump in the house that he was in failed. He had a couple feet of water. He lost all kind of stuff. He called me up and he said, hey, I need to put a claim in. I got all this water in my basement. And I was like, yeah, you told me you didn't want that coverage. And he went absolutely crazy. Of course, as you can imagine, right? It's my fault. I didn't put the right coverage in place. What are you doing? And he called me all kinds of names and whatever. I was like, hey, I'm sorry you feel that way, but so I couldn't bring it up at the moment. But what I did was, after I hung up the phone with him, I retrieved it. I retrieved the email, this whole chain of the whole conversation. And I sent it to him, and I was like, hey, after our conversation, I felt really bad that I didn't do my job. And, it felt really bad that you didn't have coverage in place to protect your family. But here's the email chain from when we put your policy in place where you specifically said, remove it from coverage. And that guy followed me from to 3 different companies afterwards because he knew I did my job. He knew that I was there to take care of him. And even though that event wasn't covered, he respected me enough to say, this guy does his job and he knows what he's doing. That was it. It was a shaky start, but it was a good business relationship because he trusts me. He trusts that I'm gonna do my job. And that's what I pride myself in doing, is making sure I take care of my clients. When you have a home policy, prior to 2024, there was a dog list that a lot of insurance companies could tell you that if you have one of these dogs on this list, we are not insuring you. You either have to get rid of the dog or find another company. And you can imagine which ones they are, right? Doberman Pinschers and Chows and any kind of pit bull, kind of Corsos, the usual suspects. I did meet your golden doodle, yeah, but he's okay. He wasn't on that list. But in Illinois, they changed the law as of January 1st of 2024, where insurance companies cannot exclude a dog just based off the breed. There has to be a specific event where they say, okay, this dog now has a bite history. So they're basically going to say, we're going to insure one bite, and then the dog's excluded. I did work for a company that prior to that would insure any dog, but once the dog bit someone, the owner was excluded from ever having a dog that would be covered ever again. So as long as he was with that company was not going to insure any dog that he had, whether it was a tiny little schnauzer or, a vicious, Doberman or whatever you want to call it. They weren't insuring that person because they were not capable of training a dog properly to not bite someone, which I thought was an interesting way that they handled it. So homeowners insurance also covers, not just a home. You could obviously have a condominium, where condominiums are a little bit less expensive to insure than a home. And homeowners also falls under the umbrella of renter's insurance. So if you get an apartment, all right, you move in with your friends or whatever, you're in school, you move away, whatever the case may be, you don't own the home, but you rent an apartment. So you want your stuff to be covered. Renter's insurance covers your stuff, okay? When we write a renter's insurance policy, we're not worried about the building. The landlord owns the building. The landlord insures the building. If there's a fire, the landlord will cover the building, but he's not going to cover your stuff. Okay, your stuff is your responsibility. And a lot of people call, like they say, hey, I need auto insurance. And I was like, okay, great. Where do you live? And they tell me, and I say, okay, is that a condo you own? Is that an apartment that you rent? Well, it's an apartment that I rent. Okay, well, do you have renter's insurance? No, I don't need it. My landlord has insurance. Well, he's not insuring your stuff. He's just not. If the house burns down, his stuff's going to get rebuilt. Your stuff is going to be in the street in a smoking pile, and you're not going to have any way to get it replaced unless you have renter's insurance. Renter's insurance is ridiculously cheap, like ridiculously, like a couple $100 a year. This year, I had a person I insured. She called me. She was a brand new client, bought renter's insurance, bought auto insurance. She was interested in life insurance. She was very knowledgeable, very, respected the whole insurance concept, which I was impressed with. We got the policy in place, and the policy was a few $100s a year. She had stuff on it, and it was a solid policy, but she was paying monthly. She paid maybe 6 months worth of less than $30 a month in premium. So like $180, right? Total by the time this event happened, where she was actually moving from one place to another and had her stuff in the house and dogs and all kind of other stuff, left to go get another load and came back and the apartment was on fire. Don't know how. Nobody knows how still. They never determined how. Lost all her stuff, lost her dogs, lost everything in that fire. Of course, as you can imagine, how could, you lose your dogs is going to be the worst part of it. My clothes and my bed, whatever, but I can't replace my dogs, right? Fortunately, we had coverage for her. Renter's insurance, the most important thing on renter's insurance, home insurance, and condo insurance is when you have an event like that, it covers your relocation costs and what's called additional living expenses. So even though she lost her personal property and she was going to get a check for that, where do you live? How do you move? What do you do while they're rebuilding the condo that you own or the apartment that you're supposed to be living in that you just made a lease for? The additional living expense part is super important. And there's a lot of companies that'll limit it to a dollar amount. There's companies that will make it just basically a calendar year or 2 years or whatever the case may be. So whatever your living expenses are, let's say your rent is $2,000 a month. If you relocate, you still have to pay the mortgage or the rent on that building, but you have to relocate now. So we're going to pay the rent on that place where you're living while we rebuild your home and your additional travel costs and your additional electric bill, because you got an electric bill here, but this one is additional. All those additional living expenses can add up. And that claim that I'm talking about, the policy cost a couple $100. The person had paid, maybe 6 months of premium or whatever. Policy payout between additional living expense and her personal property was well over $40,000 for $180 worth of premium that she basically that was paid. Still a client, still very happy. We took great care of her. She's relocated since then. That's what I like about what I do. It's an unfortunate tragedy, but the company that I had her with, we paid. We took care of her. That's the best part for me, is making sure that people are taken care of when they need me. Because insurance is really a promise, right? You'll get a paper policy and you'll be able to read it. And you'll be able to say what it does and what it doesn't do or what it's supposed to do. But it's really a promise. And if the company that you're insured with doesn't live up to that promise, well, then that's going to be a really crummy experience, right? But companies are out there that do take care of people. It makes a horrible experience as good as it could possibly be, right? It's traumatizing enough to lose your stuff. It's another thing to not have any money to live, to buy new stuff, or whatever the case may be. So that's kind of the beauty of a homeowner's policy, as far as I'm concerned. Now, there are other policies that that you guys may go over in class or not. There's a personal liability umbrella policy. You have a question, hon?
How do insurance companies like the cost of coverage and
Right.
about how long do they cover that?
Sure. So that's a great question. So every company is different the way they handle it. Some companies, when you buy a renter's insurance policy, may put a dollar amount on it, and it may be as low as like 10% of your coverage for your personal property. So if you have personal property covered at $30,000, you may only get 10% of that as additional living expense, like $3,000, which isn't much. I mean, it's something. It's better than nothing. But then companies like that I insure with Erie, they are a minimum of 12 months, no dollar cap. So if you had that incident where you had to be relocated, if you have a homeowner's policy, you have the option of 12 or 24 months uncapped, no dollar amount. So that's pretty huge when you have a home and you have a bunch of stuff and have kids and whatever. If you have to find a new home to live in while we rebuild your home, an apartment, if you had to, you probably could get out of it and get into another one for $10,000 or something like that if you really had to, because you're not worried about them rebuilding the apartment. You just got to find a new place to live right away, right? But then your stuff is covered under personal property, not the additional living expense. Sure. Right. So that's a discussion you have with your agent, because the first question I'm going to ask you is, what is it going to cost me to replace all your stuff? If I had to buy all your stuff brand new, and everybody says, I don't know. I got this couch from Aunt Sally. It's in my apartment. I got my favorite pairs of jeans that's 10 years old, but man, they're not worth anything right now. It's not about what they're worth now. It's replacement cost at the time of the loss. So if that couch is destroyed or your jeans are destroyed, what does it cost us to buy it brand new? So that's the difference, is even though you got that couch from Aunt Sally and it was free, it's still a couch. We got to put a couch back in your apartment, Professor. Right. Now there are limits on certain personal property. So when you read the policy or when the agent goes over it with you, there will be descriptions of trading, collector cards. There'll be certain limits on that. There'll be certain limits on the computers that you have. There'll be certain limits on sports memorabilia or stamp collections, jewelry items specifically. So if you don't schedule it on the policy, like I mentioned, there may be a per item limit on jewelry. So the fire is really intense and everything gets melted and destroyed, right? And you don't have anything scheduled on the jewelry part, and you only have 3,000 per item, 5,000 maximum. Well, you're going to get a check for 5,000 for the jewelry part, right? Each category has specific limits because once again, the insurance company knows that there's people out there that are going to go, oh man, my $100,000 diamond watch got destroyed in this fire. Well, what am I going to do, right? So they have limits on there. If you had a $100,000 watch, you should have scheduled it, paid the premium, and then you would get a $100,000 watch again. You'd get it replaced. If you didn't do that, then you just have to live with what the policy limits are based on each specific item if you don't schedule it. So then, getting back to the value of it, right? That's our discussion. If you call me, I would say, okay, so what's it going to cost me to replace all your stuff? And you have to think about that. And you have to give me a number that, most people give me a number that says, all right, I really don't want to pay the premium, the extra $100 a year for $40,000 worth of stuff, but for $30,000, if I save $100, well, then yeah, that's probably not so bad. Or $20,000. Everybody has in their head what their budget is, what they want to cover, what they think their stuff costs. Hopefully, you never have to find out what it's going to cost us to replace all your stuff, right? The other half of that is, as an insurance company, or if something is destroyed, we're going to replace it with brand new stuff. But there are companies out there that come in and do the cleanup for us. Those are remediation companies and reconstruction companies. So those people will come in. They have all the technology and all the tools. They bring your stuff actually to their facility and clean it. They'll get the smoke smell out. If it's salvageable, they'll clean it back to the pre-loss condition. And that's all part of the claim. As that moves along, then, they are really the experts of what they can fix and what they can salvage and what they can't. So if they say, here's a Cabbage Patch doll from 1985, it was a collector item, but we can smoke smell out and it just was smoke damage, we'll get that all out, we'll get it cleaned up, we'll get it back to them, you won't even know. Okay, great. If not, if it's charred and damaged and destroyed, now we got a collector piece that we have to figure out what it costs us to replace. And once again, every company treats different things differently. So some companies will make you schedule collector pieces like that. Other companies, if it's something that's not really going to travel a lot, something that's not going to really be something that you're going to take with you here and there or whatever, it has a higher risk of being lost, then it probably will be just included in your personal property number and you wouldn't have to really worry about that. But it's always important, depending on the company you choose to insure with, discussing any items that you have with your insurance agent, because you want to make sure if you have a collection of something that it's going to be covered or not. I had a client I recently insured has a large pinball machine collection. Had like 6 machines. They're all worth like $10,000 each or whatever they were worth. With the company he was with prior, he had to schedule all those. They had to be listed as specific items, and they had to have what kind of machines they were and an appraised value of them. When I insured him, the company I put him with was like, nah, it's in his house. It's his personal property. Yeah, it's a collection, but it just gets lumped into his personal property amount. So when you have a homeowner's policy, we take the construction cost of your home. That's your dwelling coverage. And then a lot of the other coverages fall in line behind that based on percentages. Your personal property, generally with most companies, is going to be 75% of your dwelling coverage. So if you have $100,000 in dwelling coverage, your personal property amount is automatically going to be $75,000. $200,000 is $150,000, and so on and so on. So a lot of people say, well, I don't have that much stuff. Some companies will let you adjust that number down. Some companies say, you know what? This is like when you buy a hot dog at the hot dog stand, right? If you buy a hot dog with everything, the price is the same. If you buy a hot dog plain, the price is the same. If you want extra onions or extra pickle or extra whatever, now the price goes up. So that's how a lot of companies handle it. They have the base coverages that are built in structure based on their loss experience to make clients whole again if they have an event. But then if you want extra stuff, then that's when it starts to increase the cost. Yes, sir.
How about life insurance?
Life insurance. Life insurance is one of my favorite topics. Life insurance, you're going to get paid one time, right? When you die. If and when you die while the policy is in place, you're going to get paid. Right? A homeowner's policy, you could put a claim. You could have a $10,000 claim this year, $5,000 next year, whatever. Auto insurance, you could have auto accidents and you'll get paid. You'll get your car fixed. Life insurance, you're going to get paid. Your family is going to get paid one time. You don't get paid. Your family gets paid. Life insurance is for the people that survive. It's not for you. So people a lot of times will say, "Oh, you know what? I don't need life insurance. I got money. I got money in the bank. I got this. I got that. I got a financial planner." Well, that's great, but I don't know anybody that ever, no matter how much money they have, has extra money, right? Like I got enough, there's always something that you need. My father passed away a year ago in July. He was 85 years old. He still had a life insurance policy in place. So my mother got a life insurance benefit from when he passed away. Are they doing okay? I mean, they were retired, they're on pensions, whatever. Yeah, but you know what? Having that little bit of extra money, why not? It's a cushion that helps pay the bills. Make sure that my mother can sleep better at night, knowing that if anything ever happened, she's got that money that they gave her in the bank, and it's there. So life insurance comes in a bunch of different ways to purchase it. The least expensive way is called a term policy. Term policy, you figure out what term you want to buy. Some companies will offer a 5-year term, a 10-year term, 20, 30, 40-year term policies, which means that the term you select, you're locked in your price for that term. Now, depending on the amount of insurance you buy, there's more underwriting involved. So if you buy a $25,000 term policy, you're probably going to get asked 5 or 6 questions about your health. Yes or no? Do I smoke? No. Have you had cancer? No. Any heart disease? No. And, they based off of your age, based off of the probability that you're telling the truth or not, they'll probably instantly issue that policy. If you have a child, a young person that's definitely under 15 years old, that's pretty much instant issue. Done. You just call the insurance guy, say, "Hey, I need a $25,000 policy on my child." Done. Most of the time when you write a policy on a child, it's got cash value of some sort. So you may pay $20 a month. You may pay $50 a month to put $30 in cash value in that account every month. It builds, it gains interest. So by the time that child is 25, you got a nice little chunk of change in there. There are IRS guidelines for how much money you can put in a life policy. Back in the 80s, prior to the 80s, when they changed the IRS guidelines for life insurance, there was a large contingent of people who had money who would buy a small life insurance policy and use it as basically a tax shelter and just jam as much free cash as they could into that policy. So you'd have a $25,000 death benefit with $200,000 in cash value because you jammed all that money in there. Now the IRS has guidelines based off your age, based off your income, how much money you can actually put into a life insurance policy and still have it be life insurance. There's a couple different ways to do that. There is a policy that's called a universal life policy. There is 2 different kinds of universal life policies. One has the death benefit is set, but it does have cash value in it. So if you ever cashed it out, you'd be able to pull the cash value out. Even though, let's say the death benefit's $100,000 and you have $25,000 in cash value in that policy, if you got to the point where you're like, you know what, I'm never going to die. I'm going to take that money out and take that $25,000 out and go on a cruise somewhere. You could do that. There's other policies that are still universal life policies, but that the cash that accumulates stacks on top of the death benefit. So you have $100,000 in death benefit, $25,000 in cash value. If you pass away, your beneficiaries get $125,000 because that money stacks on top of it. There's universal life policies that are called variables. So they're tied directly to a stock fund. You select it, you pick what fund you want it to be tied to, even a certain stock. And as time goes by, that money that's in there can fluctuate based off the performance of that stock. Sometimes if that stock tanks, you could lose money on your life insurance. Sometimes you can make a lot of money on your life insurance. So it's just like buying a stock, but it is tied to your life insurance benefit. Another form called index universal life. Index universal life is tied to a stock index, which is usually the Standard and Poor or the Russell. Those are the two different ones that it's tied to. Based on the performance of that index, you get X amount of interest on your cash value. If the stock fund you select, if the index you select tanks, most of the time you have a basement where it's not going to go below zero. So you're not going to lose money. You're just not going to earn interest on the index that you were tied to tanked. So that's your safety net on that. Some of them perform quite well depending on the company that you select. Many companies have different versions of that. There's a lot of people that are for it, against it, but you have to select what's best for your needs. And my favorite one is going to be the least expensive one, term. A term policy, as long as it's in place, is the least expensive way to buy life insurance. If you have $100,000 or $1 million policy and you pass away, your beneficiaries get that. Yes, sir.
How do I decide how much term, old and just out of school, I'm living in an apartment, have my
Sure.
job.
So let's do it this way. So you're just out of school. So do you have any student debt? Are your parents co-signers for your student debt, which happens a lot? Are you looking to get married soon? What does your future look like? And then based off of that, let's try to build a policy where for the next 10 years, let's say, while you're trying to pay your student debt off, if God forbid something happens, your co-signer doesn't lose out and have to pay for it. You can make sure that co-signer gets taken care of on that student debt. You're brand new out of college and you're going to buy a house and you're living with your significant other and you guys buy a house together. You got a mortgage now, right? You got a mortgage for $250,000, but that depends on both of your incomes. So God forbid one of you walks outside tomorrow and gets hit by a bus. You lose all that other person's income. Now you just lost a person that you love, that you just bought a home with, that you were trying to build a life with. On top of that, you're going to lose the home you just bought because you needed two incomes to pay that mortgage and now you don't have it. So those are painful realities of why we buy life insurance. I had a guy that was a friend of the family, and this was many years ago. This is how I became aware of life insurance. I was probably 10, maybe 12 years old. A good friend of my father had a store, and this kid worked in the store. They basically watched him grow up. He was a teenager when he started. A couple of years go by, meets a girl, gets married. They buy a nice condo, and one day, guy was going to go to work, and his wife said, "You know what? I got a really bad headache. I'm staying home from work today. I don't feel good." So he went to work. He came home, found his wife dead, brain aneurysm. No idea, no hint, no inclination that she was ever sick at all. And I remember distinctly my father saying, "Thank God that somebody talked that kid into buying life insurance, because he had enough money to pay the mortgage off on that condo and to have a nice funeral for his wife and move forward with his life." I mean, could you imagine you lose your wife, you don't have enough money to pay for a funeral, you're just a kid starting out, and you're going to lose the condo that you bought, where you got to move back in with your parents now and go backwards. I mean, that's the power of life insurance. That's why it's so important. And there's millions of stories like that. There was a statistic that I saw. It's been a while since I've seen an updated one, but it was a couple of years ago, that basically one policy every day gets paid out to somebody who bought life insurance less than a year ago. So 365 times a year, basically, somebody buys a life insurance policy and less than a year later, they pass away and their beneficiary gets that death benefit. That's pretty powerful if you think about it, right? So you never know when your time is going to come. Because you're healthy now doesn't mean tomorrow, like I said, you can't get hit by a bus or whatever might happen to you. A car accident, people die all the time from crazy things. So that's why life insurance is super, super important. If you are trying to figure out, you're trying to make your financial plan, life insurance is always a part of it. When a financial planner talks to you, always going to recommend something, and rightly so, because you're trying to protect your loved ones from that horrible thing. So that's life insurance in a nutshell. There's a whole lot more to it. We could go deep into the weeds in it, but just try to give you the overview and not put you to sleep with it right now. But certainly, if you're interested in it, definitely look into it. There's a lot of different ways. There's so many different riders and things you could put on life insurance. long-term care riders you could put on life insurance so that if something happens, you could actually convert it to a long-term care policy and take some of that death benefit out and pay for your long-term care if you get sick and you're going to pass away. There's accelerated death benefit riders where if you have a life insurance policy in place and the doctor says you have terminal cancer, you're going to pass away within 24 months, you could actually take part of that life insurance benefit out. You could do whatever you want with it. You could take your family on one last vacation. You could pay your medical bills. You could do whatever you want. You can get that accelerated death benefit. There's a lot of ways that life insurance companies are creative about you getting the money. Okay. Now, there's also life insurance companies out there that they know that people are 150 years old that are probably dead by now, right? But that life insurance policy never got cashed in, but they don't really go looking for those people either. So if you know your loved one has a life insurance policy somewhere, try to find out where it is and try to get that money. Make sure that your family gets that money, because there's certainly the other side of the coin too, where life insurance companies don't mind keeping the money. If you're not ever going to have a death claim, you're never going to put it in. They're not going to come knocking on your door and say, hey, is your uncle really 150 years old and still alive? They're never going to ask you that. So just make sure you keep track of all that stuff. So we'll touch on real quick on a personal liability umbrella policy. When you have an auto policy and you have a homeowner's policy, an extra layer of protection is an umbrella policy, which goes over all your policies. So if something happens where you have a major car accident and the liability limits on your car are exhausted, then your umbrella policy will kick in for an extra $1 million or $2 million or whatever number you selected when you purchased that policy. They're really, for the coverage they provide, ridiculously cheap. They're probably a few $100s a year for an extra $1 million worth of coverage. Now, remember, it's liability only, so it's something you caused. It's not going to cover your personal property. It's not going to cover your dog or anything like that. It's liability protection. If you did something suddenly, accidentally, negligently, that's how it's going to pay out if your policy limits are exhausted. Which, when you have any kind of insurance claim, those are the three things you kind of want to remember. If you're going to make a claim, did this event happen suddenly, accidentally, or was I negligent for something? Those are really going to be the three ways that cover you. If you have a home and you have windows that are rotting out over time and you need to replace them, that's not something you could put a claim in for. That's something happened over time. It's wear and tear. That's on you as a homeowner. If something happened where lightning struck your house and put a hole in your roof, or a tree fell on your home, that's sudden and accidental. That's definitely covered. So a car accident, sudden and accidental. Tree falls on your car, sudden and accidental. So make sure that when you think about putting a claim in, or when you think about coverage, what can happen? Under this tree in the rainstorm, could this damage my car? Yeah, sure it could. There's a lot of things that go into insurance, and only having an hour to talk to you guys about it. I hope you guys got something from it. Hope I didn't bore you too much. Hope and nobody fell asleep, which is a good thing. If anybody has any questions, if you ever want to look into a career in life in insurance at all, I'm always looking for salespeople.